Good morning. You're watching India Market Open. It's Thursday. Our markets, of course, will be the big talking point, but global cues also significant. This time around, though, not too much to talk about in terms of the handover. Asian markets are seeing profit taking. It seems like it could be a quiet day back home as well, despite a strong show by Nvidia.
So the big story, I would say, Samina, is that if you set the bar too high for yourself, you are bound to fail, and that's what's happening with Nvidia. And Nvidia is really the big story this entire morning, because even after posting 122% increase in revenues, it's not as much as investors expected, and which is why you're seeing a lot of pressure coming in global markets and Asia also following, especially considering what's going to happen to other semiconductor companies. So let's just take you through that global setup very quickly. The Nasdaq hit the most, about 1% Dow. Dow was okay, about 160 points down, but S&P 500 was also hurting because remember, Nvidia now has a 7% weightage in the S&P 500. Dow futures now recovering to some extent. So now what's the big deal about Nvidia? The semiconductor company, the chip maker, is now one of the big movers in the market. Remember, it had briefly become the largest company by market value and now is second to Apple. But the stock dropped 8% in post-market trade on disappointing earnings. Now, why am I saying it's disappointing? Because even though it beat most expectations, the fact is that their gross margin slipped a little quarter on quarter, 75.1% from 78.4%. Just take a second to soak in that this is a company which has recorded 78% gross margins, 122% increase in revenue. This after posting 200% increase in revenues in the last few years. But nevertheless, which is why you are seeing that kind of pressure coming in from Nvidia. So that's the story of the US markets. But let's talk quickly about bonds. Not too much happening there. So bond yields, the Treasury was staying pretty steady ahead of the weekly inflation data. Remember, you'll see the personal consumption expenditure data, which comes in on Friday. Street will be watching that. Not too much movement ahead of that. Crude could not hold up to its rally, so has seen some selling pressure in the last 2 days. The fears about Libya production seem to have eased, and the larger concern really is the slump in demand from China, and that is a persisting concern which is keeping crude prices under pressure as well. And Asia has been really responding to the Nvidia story as well. So companies like the Taiwan Semiconductor Company, etc., are all under watch after what's happened with Nvidia, and you are seeing a complete subdued mood this morning in Asia. But in India, let's look at what the implied open is showing us. Remember, we had a bit of profit booking towards the second half of the day yesterday, and the Nifty implied open also showing that we'll close about 45 points down. Some of that selling pressure which came in towards the close of trade yesterday, perhaps from FIIs, because if you look at the fund flow picture, it is FIIs who have sold after 3 or 4 sessions of being net buyers. They've come in and sold about 1,300 crores. Domestic investors, meanwhile, have bought 439 crore rupees. So the fund flow picture shows that there is still a bit of concern or maybe volatility, which we're going to see through the day today as well, Samina.
Indeed, Tamanna. In fact, I think we led the way yesterday. The last half an hour of trade did see selling pressure, which pretty much came out of nowhere. But just before we go into that, a quick word. I know Nvidia is the biggest story that we are tracking globally this morning. But worth the mention is Berkshire Hathaway. Now, this, of course, has been a slow mover, has managed to join the $1 trillion club. And this is the first company outside a tech heavyweight that has become a $1 trillion company. So kudos to Warren Buffett. The stock is up 30% year to date as compared to the S&P that's up 18%. A quick word on the dollar index as well, because what we are seeing is the dollar has been declining over the last few days. In fact, to just put this in perspective, it's had one of its worst months in the year since November 2023. The US dollar index is down nearly 4%. Last night as well, we saw a big drop on the USD, and this could be because of month-end demand is what some people argue. The USD trades at a 13-month low around that 100.51 mark, weighed down by the sharp reevaluation of expectations of the Fed rate cut. Remember, if the Fed cuts rates, that's negative dollar, positive risk assets. And that's how you want to view this. The dollar, of course, preempting a pretty significant rate cut coming in from the Fed. So for now, the currency is looking weak. This could be good news for the local currency back home, the dollar-rupee pair, which could see some buying on back of weakness in the USD. But coming back to our markets, it was very interesting of what happened in trade yesterday. We started the day flat, went in with very low expectations because Asian markets were not doing very much in the session. What really happened was midday trade, the Nifty made a new record high. We went above levels of 25,100. But in the last 45 minutes or so is when selling came in and the Nifty went home as flat as it could with only a 30-point gain. We pretty much gave up 100 points in the last 1 hour itself. Also, what stood out was the broader markets were selling off. So there was underperformance from the broader markets, which usually has not been the case over the last 6 to 8 months. Apart from that, we did defend and shield the 25,000 mark, and that is what's going to bring some comfort to the bulls, even though an implied Nifty is indicating a start at that 25,000 mark. Interestingly, it was IT stocks that led the rally in trade yesterday. Frontline IT and LTIMindtree, Wipro, Infosys were the stocks that did exceptionally well in the session. Again, broader tier 2 IT companies failed to participate. As we go into trade today, the expectation is that we will consolidate. We've had 10 straight days of closing in positive territory. It wouldn't come in as a surprise if the Nifty reacts to what happened on Wall Street and Asia and actually closes in the red. We will, of course, see defense happening at the 25,000 mark between the bulls and the bears. Apart from that, 24,900 will act as a very critical level of support. So the bulls will find support there, if not at 25,000. If 24,900 is defended, we still seem to be in the green for the near term and on track to achieve new record highs. What has been missing in action in that sense has been Bank Nifty. And it seems like if we have to make a material conclusive new high, Bank Nifty will have to start pulling its weight. All of August, this has been a sore point in the markets. There was an expectation that you would get some participation from Bank Nifty if the Nifty would move higher. The Nifty moved higher, but with the support of IT stocks. And I think, Tamanna, that's what stands out for me yesterday. And this is, from October, November last year, we've talked about how FIs, if they have to come into the market, they will play the large cap space. Yeah. They will play IT stocks. Yesterday, it almost seemed like a false alarm because you had the large cap IT names do really well. There was a general sense in the newsroom that maybe the FIs have come out and bought. But your numbers state that the FIs actually sold in the markets yesterday.
Exactly. There have been sellers. I think the big standout yesterday also LTIMindtree. And, up about 7% nearly when it came to close. But I don't know if the IT sort of turnaround or the excitement on IT continues today. That's one to see. So many other stocks to watch as well. And let's take you through.
Just to quickly come in on LTIMindtree, I think one of the other reasons, of course, we attributed a lot of that to the upgrade that came in from Kotak. But remember, post their earnings, and if you look at the overhang that LTIMindtree has been that big merger with the company. When you saw the IT stocks react well in the early part of this week on expectation of a Fed rate cut, you had everyone do well except LTIMindtree. Then they got excluded from the Nifty 50, which again led to selling on the stock. So they've pretty much played catch up. And I think if you look at the 6-month performance on Infosys, the stock is up 16%. You look at Wipro, it's up pretty much close to that. LTIMindtree, after a 7% rally yesterday, is exactly what Infy has done in 6 months. So it was a beautiful catch up. If the traders were sitting long on this for the last few months, they finally would have seen some money on the table.
I think you'll see some excitement in Infosys as well today for news reasons, because they've joined a Stanford program for AI research, and that's a global program really. So, I mean, that's more of a long-term bet, but that might be interesting. But I think one of the key stocks that I'm watching today is 197 Communications. I mean, the kind of ups and downs for this company in terms of news is nothing like a roller coaster ride or, twists and turns in a mystery plot, because one day they're down in the dumps, the second day they get good news. So it's a very, very volatile kind of play. But what's happened is overnight they have received Paytm and parent company, of course, being 197 Communication, but Paytm has received a nod from the Finance Ministry for downstream investments in Paytm payment services. Now, this is a big deal because it was a huge stumbling block for them. The stumbling block really was that where are these investments coming from? Are they from Chinese companies, etc.? So that nod was awaited. That gives them a boost. Now they will be resubmitting their payment aggregator license, which is what RBI had come in and put an end to earlier. So meanwhile, of course, they've continued to provide online aggregation services to partners. So Paytm is one I'm going to watch. There is a very out there report also from Ventura, which sees a 170% upside on Paytm. But we're going to get Vineet Bolinshkar of Ventura in on the show later to ask him exactly what his rationale is and why he's so bullish. But nevertheless, at least for today, you might see a bit of a thumbs up on Paytm. InterGlobe is the other one to watch out for. So news over here. The founder, Rakesh Gangwal, and the Chinkarpur Family Trust, which is essentially Rakesh Gangwal's family trust, so pretty much him, are selling up to 1.47 crore companies' shares. So that's a little under 3%. The stake sale is at a floor price of 4,953. So a bit of a discount over there to say MP. But the sentiment continues to be bullish on this stock overall. Because if you see what's happening with buybacks also recently, if new stock is coming into the market, that it's being lapped up by investors. InterGlobe has seen a lot of positive notes coming out as well. So I wouldn't be surprised if this actually ends up fairly well for InterGlobe today. The Telecom pack is the other one, and primarily Vodafone, but yeah, Bharti Airtel with some impact as well. So what's happening is that the Supreme Court has listed a hearing for the curative petition in the AGR case on the 30th of September, that is tomorrow. You would remember that the AGR was the adjusted gross revenue case. It's a case that telecom companies fought against the government of India for over a decade in the courts, and finally it was not ruled in their favor. It's a question of how their revenues are calculated to be taxed, and the initial calculation included non-core assets. That's what they were fighting for. They lost, huge impact on their balance sheets. That's why you're seeing a Vodafone in the plight it is. Now, what they're going back to court and saying is that the method of calculation of that amount by the Department of Telecommunications was wrong. So if they get any relief there, it will have a direct impact on balance sheets, and especially for Vodafone Idea. So that's one I think we should watch out for today. What also becomes positive in that sense for Vodafone is that in that court case, Samina, this time everyone's on the same side because the government of India, who has
everyone against the government.
Government is now a big owner, right?
The stakes are the same.
So their stakes are the same. So initially, all of these years, they were on opposite sides because the government wants the tax. But now, since it's a huge equity owner, they're all on the same side.
So much for conflict of interest. But yes, so that's one you want to track this morning. Along with that, a bunch of more counters that we will have our eyes on. Reliance Industries is on the list this morning. They, of course, have some good news. The Walt Disney Company has received the approval from the CCI for the 70,350 crore merger of their Indian media assets. Additionally, what's also an important trigger today for RIL is going to be the 47th AGM that kicks off at 2 p.m. Remember, the stock has been largely an underperformer, and we've not seen leadership coming in from RIL over the last couple of weeks when large caps have played or led from the front. I guess we're not going into this AGM with too much expectations either. The stock went in subdued as we see it. The other one to track, talking about block deals, and Tamanna mentioned InterGlobe could be the big one, but I would also like to add PB FinTech to this one. Tencent Cloud, of course, this is an FPI or a foreign holding investment in PB FinTech, which is looking to sell about 2.1% stake. The floor price is set at a 4.5% discount to yesterday's close, closer to 660. But as we've seen, block deals get lapped up, anything for a discount to current market price, and this one could be another one where you will see some sort of activity play out. It's always good to have the broader market names on back of order wins, and this time we've got two. We've got KEC that I'll highlight. They've received an order worth 1,171 crores for their transmission business. Early this week as well, KEC had bagged a pretty significant order in the Middle East, and this is no different. This order win comes in from Dubai and Saudi Arabia. So very clearly building that part of their business. From what we understand, the stock will see an up move in trade today. Well, you've also got Genesis Power Infrastructure. Every alternate day, we get an order win from them too. This time around, they won a significant order to the tune of 4,469 crores. The stocks had a really good run all through August, largely in order wins and supporting technicals in that sense. So despite most of its peers having it rough because we've had a volatile August, Genesis has stood out because it's managed to see some big wins in the month. Along with that, talking about orders, also Sonata Software, they've signed a multi-million-dollar IT outsourcing contract. We don't know the size of this, but it's the US-based healthcare and wellness company. The stock was down 5.5%. We lack details of what the size of the deal is, what the margins are, what is the timeline for execution. So sentimentally a positive, but the upside could be capped largely because we don't have the fine print or quantifiable data to understand what this deal will mean for Sonata Software. So Tamanna, on my list, you've got PB Fintech on the back of the block deal that's expected, KEC and Genesis once again on order wins, and Sonata as well on a deal sign.
Yeah. Just on RIL AGM, I would say two things that are really going to be watched out for is whether they announce anything on the expected IPOs, sort of carving out those parts of the business on Geo. That will be the big one, and their retail business. So if there are any timelines on that, I think that's what's really going to be interesting.
Just to add to that list of that, there's a strategic stake sale in the OTC business as well, just building up to what Tamanna said. Progress on new energy projects, succession plans, and 5G monetization plans. So those are the few facts that you want to watch out for. But the last few weeks have been about block deals, and this is also largely because of what the budget has laid out in terms of taxation, which will even out for listed and unlisted companies as early as October. So between the budget and up until October, block deals is going to be the biggest theme as holders or significant equity holders in companies will look to liquidate their stake. Well, we'll go back and talk about which ones are the ones to track this morning. Mahima is standing by with more on it. Mahima, every morning we have somebody significant, a private equity or VC or in this case promoters selling stake. We've seen about over 1 lakh crore promoter stake sale in 2024, and this is only going to escalate over the next 2 months as the October deadline sets in.
Right, absolutely, Samina. And, two major block deals that will be, on the watch out for in today's trade is PB Fintech and InterGlobe Aviation. Now, just to give details to the viewers for PB Fintech, Tencent Cloud is looking to sell around 2.1% stake, and this amounts to roughly 97 lakh equity shares. And the sale will happen at 1660, which is at a 4.5% discount from its yesterday's closing. And this will generate roughly $192 million for Tencent Cloud. Now, in terms of divestments, previously also on 6th of June, Chinese conglomerate sold a roughly 0.73% of its equity at 1259 a piece, and which generated roughly 415 crore. And on May 26th also, Tencent has disposed over 2% of its shares and sold for 562 crore, and this bulk deal involved roughly 94 lakh shares, and this was done at 596 a piece. Now, in terms of details with respect to InterGlobe Aviation, well, Rakesh Gangwal and the Chinkarpur Family Trust are expected to sell roughly 1.5 crore shares. In terms of Rakesh Gangwal and Chinkarpur Family Trust currently holds roughly 7.5 crore shares, and the sale will be worth roughly $804 million. In terms of total holdings, the total holdings will reduce by roughly 20%, and the shares are being offered at a floor price of 4,593, which will be at a discount of 5.5% from its yesterday's closing. Now, in terms of Q4, Gangwal already sold 5.8% stake, raising around 6,786 crores. In terms of June 24 holdings, Rakesh Gangwal holds roughly 5.89% stake, and Chinkarpur Family Trust holds around 13.5% stake. And in terms of timeline as well, Feb 22, Gangwal did step down from its board, and since then, Gangwal and the family has been selling off stake in Indigo. As of December 22, it held around 34% stake. However, as of December 22, Rakesh Gangwal held 13.24 only from that entire stake, and Sobha Gangwal hold around 7% in December 22. However, entire stake of her was sold in September 23. So this will definitely be one of the blocks to watch out for in trade today.
For that, Mahima. All right, big announcement yesterday, and we just want to talk a bit about what the possible stock impact could be. So the cabinet approved 12 smart city projects in the meeting yesterday under the National Industrial Corridor Development Program with an outlay of 28,602 rupees. Plus, rail infra projects were also announced in this cabinet meet. Now, Ronald Sioni, VP of Infra and Cement at Sher Khan by BNP Paribas, joins us now. And Ronald, very good morning to you. What we're trying to get a sense of is how does this impact listed companies and what is the potential for the private sector? We've already seen a stock like L&T on a tear the last couple of sessions. Do you see this as one of the big picks? And do you see any immediate impact for these group of companies?
Yeah, good morning and thank you for having me on the show. So yeah, this is the first step actually by the government because the government has envisaged about 15 lakh crore investments to be done during FY25, and this is the first such announcement which we are seeing for the development of industrial smart cities, and apart from these railway projects and hydroelectric projects also. So overall, this development has a effect, longer term impact on infrastructure as well as other allied sectors also. For infrastructure space, we expect L&T, PNC Infratech, KNR Construction, apart from other infra stocks to benefit from the same. In the capital goods also, like stocks like ABB, Siemens, Honeywell Automation, Kaynes International, BEL, Havels, Crompton Greaves, Vatek, Wabag. So these are expected to benefit. For cement space also, especially if the projects are coming in northeast regions for hydroelectricity projects, apart from smart cities development. So companies like Dalmia Bharat or Nuvoco Vistas, apart from Ultratech and Sri Cement, we expect to benefit. In the building material space, players which are catering in the steel piping industry, especially to the infrastructure projects like APL, Apollo Tubes, high-tech pipes, these are expected to benefit. For real estate space, the companies which have larger tracts of land, especially for industrial clusters like Mahindra Lifespace, which can be used for manufacturing activities. Also Shobha, TARC can be another stock. So these are in the real estate pack. Apart from this, paints also there could be impact on Asian Paints, Indigo Paints, Grasim Industries. So there can be impact on these various sectors and various stocks from this announcement. But this is just a start from the government to kickstart the government infrastructure investment, which we should see further investments going ahead as the year passes by.
Right. Ronald, of course, if we look at it from a 3 to 5 year time horizon, and it's very kind of you that you've listed out so many stocks for our viewers, and this is what people like Tamanna and me crave, because that really helps actionables for viewers as well. But let's take it one at a time. The cement sector, is there any change in fundamentals as well? And I ask you this because I believe raw material prices are coming off. The second half of this year is expected to see a pickup in demand. There are a few triggers, and of course the industry's biggest talking point has been consolidation. How do you expect all those factors to play out? And if there is a preference, where would the biases lie? Would you be geographically picking cement stocks in the next 1 to 2 years? Would you pick companies where you see that aggressive consolidation, market leaders? Or would it largely just be backed by operations and fundamentals and you'd go with that? So if you can break it down for me and tell me where your biases are and why, and if the fundamentals of the industry have changed.
Yes, so you have rightly put up the cement space. The key hangover on the stock on the sector itself has been the weak pricing environment, which we have seen during Q1 and Q2 also during July. But from August onwards, we have seen company attempting price hike in the range of 10 to 30 rupees per bag, but weak demand has not absorbed this kind of price hikes, and most of the regions have not seen or undertook such price hikes. But the intention is clear that as the Q2 ends or start of H2 happens and demand improves, there should be a revival in cement prices. Hence, we expect demand and both cement prices to, improve, if not, remain stable during H2. On the consolidation point, yes, the consolidation would continue, and the companies continue to eye, smaller players in the southern or eastern regions. There have been news around with respect to acquisitions of various small stocks. But during this period where the prices are very low, and there could be impact on operational profitability in the near term, we expect investors to stick to larger players like Ultratech, a safer player like Ultratech, and a market leader. On the second tier, we prefer Dalmia Bharat, Ramco Cement, and Sri Cement because those multiples have corrected because of aggressive pricing environment by the market leaders, Ultratech, ACC, and Ambuja. So, second tier players like Sri Cement, Dalmia Bharat, and Ramco should see a re-rating once the pricing environment improves. But stick to market leader and second tier stocks. Only the smaller or the very small or mid-sized players can be preferred if there is development on the acquisition front. But pressure on cement prices can impact to a great extent to the smaller cement players.
Ronald, some of the infra plays that you talked about, L&T, Siemens, I think you talked about BHEL as well. How would you rank them? And let's come to an L&T specifically right now. When we're talking about this, and we're talking about over a 1.2 lakh crore rupee opportunity for the private sector. Of course, this is just the first sort of announcement. We have to see how it pans out. But seeing the track record of the government, you know that these projects are going to be pushed through. Who would be the biggest beneficiaries, and would L&T really be on top of that list compared to its peers in that space?
So, L&T during Q1 has seen, revenue booking or order inflows, the good results which were driven by overseas revenue booking and overseas order inflows. There was weak domestic order intake. With this announcement, and if there are more, then, the domestic order inflow should also improve for L&T. So it could benefit from both, from overseas as well as revival in the domestic tendering. You can, possibly also expect improvement in the domestic order prospect pipeline for L&T as the Q2 or Q3 ends. So, as it has been doing very well in overseas, and if domestic tendering activities picks up, then it makes L&T in a sweet spot. And we have also seen the core projects and manufacturing business seeing improvement in margins, stable operating margins, and commodities being stable at this level, currently at lower levels. This should also help L&T to maintain those margins, and can help bid a little bit aggressively for projects going ahead. So L&T remains one of our preferred picks in the infrastructure space to play for the domestic pickup in tendering activities.
I'm not sure if you track, but do you track the cables and wires space? I mean, I'd imagine it's an ancillary to the big action in the market. And if you, yeah, just a quick question on that. I know there was an anti-dumping duty put out by the European Commission as well on 10 of the optical fiber manufacturers. There are very few outside those 10. Would this also be, irrespective of this, would this also be a good proxy to play the infra space?
Yes, players like Polycab are also expected to benefit in cables and wire sector, but I stick to infrastructure, cement, building materials space, and we can get someone who is currently tracking capital goods sector as a whole.
Lastly, Ronald, I know there are so many opportunities available, but the fact remains money is limited and capital is limited. Top 3 stocks where you see value and where you see a strong outlook from a 1 to 2 year time horizon.
So, on the large cap space, we are preferring Ultratech, L&T. Then in the small cap space, segment was PNC Infratech, or say PL Apollo Tubes, Mahindra Lifespace, Grasim Industries, and on a very small scale, high-tech pipes in the realty space, and tech realty, Arvind Smart Spaces. So, we are sticking to, quality stocks in both large and mid-cap space.
All right, thank you so much, Ronald. Great speaking to you. And, in infra has been a theme that has been pushed to the back burner for the last few months, or I would say a better part of this year. Does it make a comeback as the first term and the first year of Modi 3.0 unfolds? And these are some of the plays that you could look at. But meanwhile, important story that we wanted to highlight for you. Market regulator SEBI has warned investors of misleading practices in SME stocks. The regulator said it had taken action against various entities and urged investors really, not to fall prey for such tricks. Let's go across to Charu for more details. Charu, what exactly has the regulator said?
Good morning, Tamanna. So the regulator on Wednesday came up with a sort of a press release and told the investors to exercise caution and not believe any rumors or unverified social media posts while investing in small and medium enterprises. Now, they basically highlighted a procedure that is usually followed by certain SMEs to manipulate the investors. What this is that firstly, a very unrealistic and positive picture of the operations of a particular small and medium enterprise is painted. And once the investor gets lured into it, it is followed up by bonus issues and split stocks. And after this, the promoters of the entity offload their holdings at a very elevated price, and the investors are in turn taken for a ride. And that is why SEBI has asked to not basically act on a whim or based on rumors and exercise caution.
Very big statement there from SEBI coming in. Thank you, Charu, for all of those details. And really, at a time when, the kind of valuations SME IPOs are getting, even for listed stocks, just rumors and reports which are not substantiated have to be looked at very, very closely. All right, Agam is joining us now to talk about what we can expect on the F&O side of things today. Agam, what's the setup looking like?
Well, it's interestingly poised, the markets at the moment. 3 straight days where we, in fact, actually saw the Nifty hover around 25,000 and close above that particular mark. Yesterday was no different. That's exactly what we saw. Of course, we are looking at rollovers now as we move into the final expiration day for the August series. Rollovers are at around 57%, but this could be a higher number towards the end of this trading day. Now, moving on to the Bank Nifty, of course, we're also looking at the new series, and with that, we've seen, obviously and naturally, a substantial increase in open interest there. Even though the index came off by around 0.25%, it was once again a fairly quiet weekly options expiry for the Bank Nifty yesterday. But as we move into trade today, what are the levels that we are watching out for? Now, we do know that the Nifty has consolidated around 25,000, and yet we have more puts being written there as compared to calls. On the other hand, when it comes to the call action, we have a little bit more writing around the 25,100 mark. Now, if the Nifty were to consolidate, this is giving us a little bit of an idea within around what we can in fact expect the Nifty to move within, and that is that 100-point range. 100-point range is a very, very narrow one, and if we in fact do see a direction on the Nifty, then naturally we are going to see unwinding on either side of 25,000 or 25,100. So that's perhaps something that a lot of traders may want to keep an eye on. And that's not to say that we may not see volatility, because we could very well see that if we in fact start seeing unwinding either on the 25,000 put or the 25,100 call moving in. Of course, we made a new life high yesterday, but we've not seen as much momentum playing through. So this is as far as your overall positioning on the Nifty 50 is concerned. But let's take a look at what our experts make of these current market conditions and how they are placing their bets. Well, we have Rahul Ghosh of Hedge.in joining us on the show. Good morning, Rahul. Thanks for joining in. Let's start, as usual, with your assessment on how you're looking at markets at the moment.
Good morning, and thank you for having me. So last week, if you remember, we had an assessment that Bank Nifty would move towards the upside or stay sideways to upside. And keeping that in mind, we planned a strategy where we had bull side call legs, which is around 5,800 to 51,200. If you notice, bang on, that is the range in which Bank Nifty is currently opening today or where it closed today. So that played out pretty well, and we are in some profits on that one. Right now, we are expecting for the next week to 10 days, the sideways move to continue, but with a tinge of downward bias. Between 51,200 and 52,200 is a congestion level for Bank Nifty. And if Nifty has to move up, let's say another 400 odd points, which is what we expect will happen, Bank Nifty has to trade above 52,000. But currently, since there are no signs of that happening and there is call writing happening, we expect a range to be sideways for the next week to 10 days. Keeping that in mind, we're planning a sideways to bearish structure. May I go ahead with the structure?
Go ahead and explain what kind of structure you're deploying here, Rahul.
Sure. So what we're doing is we're buying the 51,000 put of 4th September expiry and selling the 49,600 put of 4th September expiry. This is a simple bear put of next week expiry. 50,000, I beg your pardon, 51,000 put buy and 49,600 put sell. Now, whenever you plan a debit structure, you will notice that you're always a pair of premium, which is also the case here. So to make sure the debit becomes lower, we are selling two additional legs, namely 49,500 of September end expiry to get in some extra credit. And to hedge that sold 49,600 leg, we are buying a 49,600 again, 4th September expiry. This is called as a modified put butterfly, where the initial debit spread is protected by another bull put on the downside. The risk in the trade is approximately rupees 1,000. It's a low risk trade. Of course, depending on how low Bank Nifty opens today, that risk might go up by 100, 200 rupees. But predominantly at yesterday's closing prices, the risk would be about 1,000 rupees for the entire set. It's a four-legged strategy for next week's expiry.
Okay, and any potential adjustments, Rahul, or do we just continue to ride this until we will hit the 4th of September?
We continue to ride this, like you rightly said, until the 4th of September. The only point where there could be an adjustment is if Bank Nifty completely does different to what our view is. Now, our view, if you remember, is sideways to maybe a tinge of downside. If Bank Nifty moves sharply up, what one can do is one can roll up the 49,500 sold September put to a closer buy strike, therefore getting in some extra premium. What that will ensure is your current risk of rupees 1,000 or 1,200 further reduces. That would be the only potential adjustment over here. The only risk in the trade is a sharp upward movement in Bank Nifty, which currently seems a little unlikely. But of course, markets, you never say never.
All right, Rahul, we'll leave it at that. Thank you so much for joining us and taking us through your view on the market at the moment. Interestingly poised, certainly, and also helping us with that option structure on the Bank Nifty. Of course, we'll continue to give you an update. And next week, as usual, Rahul will once again join us and perhaps surprise us of how this particular option structure has also panned out. Of course, don't forget that we're also starting a new queries section on the futures and options space, in fact, which has been underway. So if you do have any queries when it comes to the futures and options space based on in positions that you have already taken or positions that you may be interested in taking but you need an opinion on that one, don't forget to WhatsApp us on the number which is flashing for you on your screen below. So there you have it. With that, it's back to you all.
Yeah. All right. Thank you so much for that, Agam. Meanwhile, interesting brokerage call. UBS has a note out on power financiers, REC and PFC, where they have a buy stance for both and a major upside. Harsh joining in with the details.
Well, absolutely. They're preferring PFC over REC just given the valuation gap between the two in terms of price to book. And that is it's a sizable kind of gap. I'll come to valuations, but that's where they are seeing an upside of 25% on PFC and around 17% on REC. So again, a very solid upside from here as well. Just in terms of what they are seeing as levers, first off, they believe that growth seems to be extremely strong. The levers for growth, of course, is logistics and infra, where PFC and REC are venturing now. Renewables, that's a new lever for them, and they believe that that cycle will play out well for both of those financiers. And they also believe that stress dynamics in the current cycle are very different from the past cycle. What they seemingly point out is that funding to state government backed entities in the past cycle was lower, and this time around is higher. Of course, as the cycle plays out, that may change, but nonetheless, they believe that the stress dynamics are quite different. Just in terms of the way they're valuing this, and this could hold the key, 1.2 times price to book is what they're valuing PFC at. Now, this is FY26 price to book, and they believe that REC commands a 1.7 times price to book, and that differential in terms of price to book valuations currently offers that higher upside to PFC. Mind you, PFC holds over 50% of REC as well, so that to be kept in mind as well.
Right. Thank you for that, Harsh. Those are a few of your brokerage reports, or rather UBS on power financiers. Track those in today's day of trade. There could be some activity on those stocks. There will be a whole bunch of other names that you want to track. Because remember, the broader sentiment in the market will be relatively quiet. We've gone into a little bit of a consolidation mode. But the stocks on your list this morning should be Infosys as they join Stanford HAI program, SBI, they've successfully raised funds via Tier 2 bonds. Sonata Software signed a multi-billion-dollar pact with the healthcare and wellness company. Quantifiable numbers will only be out later today. RIL, you have the much anticipated AGM, and you've also a CCI that's okay, the Reliance Disney merger, which was again priced in or expected. And Vedanta, that could be a big one. A third interim dividend meet is expected on the 2nd of September.
Yeah, some of the others that could react positively today, Paytm, they've got a nod for downstream investment in Paytm payment services. Genus Power, the arm, has got about 4,500 crore rupees of orders. PDS is raising 430 crore rupees via QIP. NLC has a deal with the Telangana government, while Nalco has signed an MOU with Kabul and Oil India. So those are some positives. KEC, international, a stock that continuously buzzes. Another set of order wins of about 1,171 crores. And as we spoke to Ronald a little while ago, could be one of the beneficiaries of some of the cabinet decisions on infrastructure yesterday. PTC Industries QIP floor price at 13,984 crores could be seen as a positive, and Max Estates has a 150 crore fundraise. There is one negative though. MTNL, the Union Bank, has frozen their accounts. But I mean, I don't know. There is this thought that the government will come and bail them out. One way or the other. So we'll see what happens with MTNL. All right, Nirav Ashar, Head Equity Research Analyst at Latin Manharlal, joins us on the show. Very good morning, Nirav, and great to speak with you. We've put out some of the stories on the watch list, but let me just get your overview of the markets struggling really to hold on to gains. That's the kind of trend that we've seen through most of the week. What do you think will be the big drivers today and the big stocks and sectors that you are keeping on your radar?
Yeah, good morning and thank you for having me on your show. I think as far as the markets are concerned, yes, clear signs of consolidation. Markets are taking a breather at this point of time. But we've seen a good support coming in from the IT pack. So I think the IT sector continues to perform quite well. So we like the frontline stocks, especially Infosys, which has given a return of around 30-32% in the last 3 months. HCL Technologies, which is up by around 27-28% in the last 3 months. And TCS, which is up by around 18% in the last 3 months. The mid-cap index is trying to play catch-up, and I think we've seen some positive momentum in the LT Mindtree. And but I think as far as we are concerned, we would like to be very selective and look at Tata Technologies. So that is one factor. Apart from this, we have the Reliance AGM today, so look forward to that. And practically speaking, as far as Reliance is concerned, I think what the market would like to look forward to is the fact that a very diverse set of businesses and with very, very different margin trajectories, different kind of business models. So I think the sooner the better the demerger process needs to get going.
Aditya Arora joining in with a technical view on the markets. Aditya, yesterday's trade was interesting. We've spent the last 10 days crawling up. Markets have lacked volatility, which is good. So clearly we are in a consolidation phase. But yesterday, midday trade, the markets hit a record high. The last 1 hour is when there was selling that got intensified. Not even the last hour, the last half an hour really. And the Nifty shielded 25,000 but could not close or make a new record close on the index. Does that give you enough vigor to go long on the Nifty? Because if 24,900 gets held, a new record high is just around the corner, I would imagine.
Very good morning. That's because we are not seeing good support from the heavyweights like Reliance, although IT is doing a good job. But today that could also be in pressure because yesterday Nvidia results were out and post-market it's showing 6% down. So there was some profit booking on Nasdaq also as valuations are pretty stretched in international markets. The Magnificent Seven are now highly overvalued, and stocks like Nvidia, comprise almost 5% of market cap of US markets. So markets are stretched, and hence there could be any reason for profit booking. So, and then look at the market. Nifty was plus 100 points and Bank Nifty was plus down 100 to 200 points. So that isn't showing that all cylinders are firing at particular time. The support is lacking from few heavyweights. So
while
I don't think synchronization of trend or all the segments are doing well. There's not proper participation from broader market.
Right.
So one should look to take chips off the table at higher levels. But I like banking space.
I'm glad you bring that up because Bank Nifty has been absent in all through August. And I think the Nifty has to scale to new records. Bank Nifty has to catch up. It struggled even yesterday. We expected Bank Nifty to, do its part, but it didn't. At the current level, a long trade on Bank Nifty could be recommended, Aditya? Aditya.
Hello?
Aditya, that question's for you. Would you initiate a long trade on Bank Nifty?
I don't think one should go long right now because actually the momentum is lacking. There are particular NBFC counters which are but if we particularly talk about banking space, then I would wait for a breakout above 52,000. That would be the breakout point, and over there we could see some good momentum in the index.
Everyone likes private banks, but the trade hasn't come through yet. What do you think is restricting private banks from participating? Sporadically, of course, we've seen the HDFC banks and an iBank, do have random updates. But generally speaking, that trade hasn't played out. What is going to happen? Where do you think the bias is? Nirav, that was for you.
Okay. Yeah. So I think as far as the private sector banks are concerned, they have been struggling with the deposit mobilization related issues, the cost related issues. The NIMs have been under pressure, and the valuations have looked a bit stretched because the growth has not been coming through. So apart from that, of course, the aggressive attitude of the FIIs also has played a part in this. So I think all these factors have been contributing to the underperformance of the private sector banking space. But I think going forward, the participation from the private sector banking space is necessary. And of course, the Bank Nifty is necessary for the markets to propel forward.
Nirav, what was happening in Trent yesterday? It keeps getting re-rated post-earnings. I mean, the joke is I'm calling it the Nvidia of Dalal Street, 150% up this year. Would you buy trend? 5% up move yesterday. There was a brokerage upgrade. If you don't own the stock, what does one do? Do you get tempted and fall in the trap?
No, it's better to stay away for the moment. But I think trend has outperformed, and I think we keep hearing strong statements coming in. We had this statement coming in from Noel Tata, which stated that trend is capable of growing 10 times further from these levels. So I think this kind of statements, of course, are naturally going to motivate the buyers to come ahead and buy the stock. And of course, apart from this, they have targeted Star Bazaar as the next growth story. So I think, yeah, for the momentum traders, I think definitely they would jump into this, but we would like to wait for some time before we enter the stock.
What about you, Aditya? A quick word on how the charts look for trend and your stock recommendations this morning. Aditya, what about you? What's your call on trend and what are your stock recommendations for the morning?
Stellar move on trend, one-way move, but I think if you look at the options market, then it's suggesting 200-point upside or downside from here. So probably the resistance place for the counter is somewhere around 75,000. One should look out for this space to actually see how the counter is behaving. I feel there could be some positive spillover effect in the next expiry also, because in this expiry the counter has rallied more than 40%. That's pretty huge. So in start of the next expiry, there could be some positive spillover effect, but one should watch out around 7,500 to 7,600. This could be one of the important pivot points to watch out for trend, because there could be some scope for profit booking if unwinding starts happening over there in the long positions. So I would watch out this price zone 7,500 to 7,600.
Aditya, hi, good morning. Tamanna here. What are your top calls for the morning? All right, there's an audio issue with Aditya. Aditya, I think we'll fix that and we'll get back to you. Meanwhile, let me go across to Varsha, who has more stocks that should be on your radar this morning. Yes, Varsha?
Good morning, Tamanna. So let's start with companies who have won orders yesterday, starting with Genus Power Infrastructure, where they've won order of rupees around 4,400 crore. They've received 3 LOAs for advanced metering infra services. Now they're going to design, supply and install 5.59 million smart prepaid meters. Then we have KC International. Again, they've won new transmission and distribution orders of around 1,100 crores in Middle East. One is transmission line in UAE and other one is in Saudi Arabia. With this, the order intake stands at around 10,000 crore, which is a growth of around 80% compared to last year. Then we have Sonata Software. Again, they've secured multi-year, multi-million-dollar IT outsourcing deal. Now they're going to partnership with US-based healthcare and wellness company. A company will optimize IT budgets and modernize technology. Then lastly, we have NLC India, wherein they've signed 25-year agreement with Telangana for 200 megawatt solar power. Now this solar project will generate around 1,300 crore units of green power, and this will offset 90 lakhs tons of carbon emission. Now this project is expected to commission by June 2025.
All right. Thank you for that. Some of the stocks that are on our radar today and we've talked about as well. Nirav, let me come to you on the question of Paytm, and those are one of the stocks we're tracking today because they have now been given the nod for downstream investments into Paytm payment services. On top of that, their aggregators license, they will now resubmit their applications. Not sure if this is the light at the end of the tunnel, and do you expect any upside on a stock which has been hit by so many regulatory headwinds?
Yeah, so the stock has been quite volatile, and I think there have been a lot of ups and downs. Temporarily, I think this could be a respite as far as the stock is concerned, but not sure whether we'll be having a look at the stock at the moment, because it's too volatile to be handled.
some of the big winners from yesterday, let me talk about tech stocks. Do you expect that upside to continue and anything that you would now take a position on?
Yeah, so we've been invested in Infosys and TCS since the last 3 months, more than 3 months. And now we've started looking at stocks like Tata Technologies. We've added a few positions over there. So we would like to be very selective as far as the IT space is concerned. But yes, there is some amount of confidence which is coming back in the sector.
There are a bunch of stocks there that you want to keep on your radar, but we will be slipping into a break as we gear up for pre-open trade. Implied Nifty, remember, is indicating to a muted start with a little bit of a gap down. But speaking at the 2024 Regional Industrial Conclave in Gwalior, Karan Adani, the MD of Adani Ports, affirmed the Adani Group's commitment to contributing to India's growth story with a keen focus on developments in Madhya Pradesh. Listen in as we slip into a short break.
However, this remarkable transformation across the nation is equally complemented by the state level by exemplary leaders as Dr. Mohan Yadavji. Under him, Madhya Pradesh is becoming a standout example of economic growth. I'm proud to say that Adani Group is deeply committed to this great development vision at both the national level and the state level. In the state of Madhya Pradesh, we have already invested 18,250 crores and created 12,000 jobs. Gwalior is fast becoming a tourism hotspot and a pool of high-quality talent.
Welcome back. A quick look at the implied open before we get top picks of the day from Aditya Arora. And we're looking like we're in for a bit of a soft start, about 37 points down on the Nifty. Now, Aditya Arora and Nirav Vash are with us this morning. Aditya, I hope you can hear me now. Let's get your top picks.
Sure, I can hear you. My first top pick is Aptus. After a good correction and consolidation, this stock showed good movement yesterday. So that's a buy at 318, 305 is the stop loss, and 331 to 340 is the target. And second stock is Engineers India. This stock also outperformed the market, and so it's a good buy at 226. 214 is the stop loss, and 240 to 250 is the target.
Nirav, NBCC bonus issue, Vedanta dividend. Either of these counters that tactically could be, accounted for in your portfolio?
Yeah, so I'd like to look at both of them as a matter of fact. NBCC looking good on account of the prospects of getting good orders from the government, especially in the construction space. So I think that is one, and on account of the bonus issue. And even Vedanta, because of the third interim dividend and the strong asset profile is there.
All right, let's talk now to Vineet Bulinchkar. He is joining us on an interesting note he's put out. He's the head research at Ventura Securities. Vineet, a very good morning to you. And, I was going through your note yesterday on 197, and I have to admit, it left me a little gobsmacked. Because you have said at an upside of 117 rupees. You're saying that Paytm is poised for a robust recovery. And you see, a target price really coming in quite massively. Now, I'm just wondering what is making you so bullish on Paytm when the regulatory troubles for the stock just don't end?
So let me take you back 1 year to FY23. The company had broken even, okay? And then you had the RBI strictures coming in during January. After that, you saw their business fall close to 20% at its nadir. But from there, they've rebounded back to the, their normal business state, which was there in January, prior to RBI strictures. And what is happening is that in spite of them losing the payment bank license, FASTag and other services, wallet being shut down, they have done a remarkable job of coming back. Their merchant base has not suffered. In fact, it has grown. And, we are expecting that their GMV will double from here in the next 3 years, while their loan coordination business should expand by 4x. And, merchants and the marketing services, X sales to Zomato should actually go up by another 20% over the next 3 years. So, we are talking of substantial business recovery and growth. And, to my mind, there is no digital platform that is as robust as Paytm offers and of gold standard in terms of technology. So we remain very constructively bullish, and we expect the stock to break even EBITDA before your ESOPs this year and get into the black in terms of profits at the end of FY27. And notable is that, they've got the nod from RBI for the payment aggregator license. Now, this would not have been possible if, some kind of approvals or nod were not coming from the RBI. So, all good things happening, and we believe that the stock is at the precipice of a good, trajectory playing out.
Vineet, while we give it that they are, some may argue, gold standard in the business, but there is increase in competition, even though they might have the first mover advantage as it stands. A few things are working out in their favor, as that approval that we got, and the stock's also reacting to that this morning in pre-open trade. Any downside risk to your target price that investors should keep in mind?
So, I believe that most of the downside risks have been factored into price, and they have circumvented their models away from any kind of regulatory stricture. And just to give you a sense, they've not restarted PNPL or the wallet, or even payment of housing rent on their app, because they believe that they don't want to get into any kind of friction with the regulators. So once the growth comes back, and they're steady with their seeding of the UPIs of the partnering banks, they expect that once they complete this, the payment bank will come back. So we are quite positive on, more positives than negatives out here, and risk is already priced in.
Vineet, so, even your bear case scenario has a target price of 870 rupees for Paytm. In your bull case scenario, going up to 1,444 rupees. Now, the only question is that when you see their GMV doubling, how does that really happen when the biggest part of the business has already been hampered and the whole landscape is changing so quickly? I'm just wondering, Vineet, and I'm asking you very honestly, are you being overly optimistic right now?
No, let me give you look at it. They did not lose any of their merchant base. Okay, despite the disruptions that happened. In fact, they have got 30,000 feet on street who were able to retain their merchants. Merchant payments are coming back to normal, right? And coming back to the levels prior to that of the RBI stricture. So, we have covered up whatever losses were made. So that is very important. Secondly, none of the competitors have been able to get their merchant model right the way Paytm is running. Okay, even if Jio comes in, they will take at least 3 to 4 years to, kind of get their act together. And another thing, which is very important that we should understand is that our payments business as a country, UPI payments is a fraction of our GDP. While it used to be somewhere around multiples in China. So, we have a very, very long way to go. And I believe that 4 to 5 players can easily coexist and be profitable also. But, Paytm is past its burn rate, and now they're, into the consolidation and the takeoff stage, while the rest of the players will actually have to, burn money, get themselves seeded into the ecosystem, and from there, grow on the path to profitability. So we are way ahead of the curve as far as the positivity starts playing out.
Okay, just one last question. This nod from the FinMin for downstream payments in Paytm payments business, do you think that this is a big positive trigger in the nearer term? Because, of course, your targets go up to FY27. You're giving them 3 years to break even, etc.
Yeah, I think it's definitely positive to that.
Okay. Thank you so much, Vineet Bolinchkar there, Head Research Ventura Securities. I mean, he stuck his neck out. He's saying that Paytm is going to be the big bet by FY27. Meanwhile, the stock up in pre-open trade. A lot of other movers as well in pre-open trade, and we'll talk about some of them. In fact, Aditya, let me come to you and see if you've spotted anything interesting. We're seeing movement in Vodafone, something we pointed out earlier this morning, KEC International as well. And remember, we're talking to the management in a bit. Sonata Soft, all of them seeing some action. Any bet for the day that you would want to add?
I think Aptus is showing good movement in the morning, so I think that could be a good bet right now. And meanwhile, I'll wait for the market to open so that we can have a good steady prices over there.
Aptus is expected to see a 1% gap up in early minutes of trade. Well, apart from that, it seems like it could be the rest of the market may be relatively quiet, but need of a couple of counters, that have been buzzing on order win has been Genesis Power and also KEC has seen order wins. The T&D business is doing well. All in all, even the earnings were rather impressive. On both those stocks, what is the strategy? Do you like them enough to be allocating significant capital to them?
Yeah, as far as KEC International is concerned, the order book has been continuously swelling, and we've seen a bulk of the orders coming in from the T&D space, power T&D transmission and distribution space, and this has kind of propelled the company forward. And apart from this, there have been order wins in the water segment, in the building segment, in electrification, railways related business. So the order book has been quite impressive. It gives revenue visibility for the next few years. The only point to be considered is the margins. The margins have been on the downward side. The execution has been quite good. But I think if they are able to maintain or improve their margins from the current levels, that is the way forward as far as the valuations are concerned. Coming to Genus Power, I think the focus again on the power sector, where we have automated meter reading and advanced metering infrastructure, where they have won a lot of orders. So very, very impressive order book build-up. And again, this ensures revenue visibility. But I think, again, over here, execution will be the key. And the second important factor to watch out for will be the margins. Because a lot of order-related things are captured in the valuations. So going forward, cash flow and profitability will be the way to look forward.
That's Genus Power for you and KC. Both have bagged significant orders. But like Nirav said, margins is what you want to keep an eye out for. With KEC, at least the margins in the quarter were at about 5.99%. There's been a slight improvement, but the good news is that they've repaid significant debt, and that's reduced their interest cost. So all those factors could aid well for KEC. Genus, on the other hand, has been on a strong footing. But talking about just a small detour, we'll focus back on the tech space. And you've seen some of these frontline IT stocks do quite well. Rucha is standing by with a quick view from what CLSA has to say on HCL Tech.
Right, Samina. So HCL Technologies had its investor day yesterday. Now we have CLSA, which has maintained a hold rating on the stock. The target price is at 1556, implying a downside of around 9%. Now the brokerage house says that though the company is one of the fastest growing IT companies, it has stretched valuations. Now talking about the call takeaways, it also said that management is very much confident of achieving double-digit revenue CAGR, that is compounded annual growth rate, over the next 5 years. While talking about the near-term tailwinds that could help the company achieve this kind of growth is green shoots in demand and also revival in the discretionary spends in the banking space. Now, banking is such a space wherein most of the IT companies gets majority of its revenue. So green shoots over here is a positive for all the IT companies. Talking about manufacturing activity, the brokerage house believes that manufacturing activity is also expected to improve because of its move towards the S4 space. The cost optimization deals, which are majority of the deals which most of the IT companies have been talking about, is also expected to remain strong. So these all are the tailwinds that the company has mentioned, but the brokerage house believes that stretched valuations have made them recommend a hold rating on the stock.
All right, thank you for that, Rucha. Quick take, Aditya, on HCL Tech, if you have, and anything you can add, but not Aptus, because we've already mentioned that.
Sure.
Yes.
So I technically, there's a breakout above 1755 over there. One can buy the counter, and stop loss should be placed at 1715, and target is 1800. I have few more opening trades. Can I share?
Yes.
So Biocon looks good in the opening, so one can buy this counter at 364. 352 is the stop loss, and 376 to 380 is the target.
That's, of course, a few stocks there. Biocon seeing a pre-open tick of about 2%. There'll be lots in focus this morning. The Nifty is opening flat as expected. Remember, not too much of a handover from global markets, and more importantly, the VIX has also declined substantially over the last few days. So we are trading in a tight range with very low levels of the VIX. Stocks like PFC and REC will again be in focus on back of that UBS report. You have a view on this, Nirav? I mean, we've complained and talked about those valuations that have been exceptionally stretched for power financing companies. But every now and then you'll have a global brokerage that will come and aggressively upgrade these stocks. Both these stocks remain EPS upgrade cycles, is what UBS has said. They expect the ROE to remain robust in the range of 18 to 20% as well. Do you have a quick view on these stocks before we go into pre-open and go into market opening?
Yes, I think we continue to remain positive on these stocks, because as far as the power sector is concerned, there's a long highway of growth ahead of us. And this time the story definitely looks quite different. The power generation space has been showing a lot of discipline. There's a lot of discipline as far as the collections are concerned, recovery, etc. The T&D losses have been coming down. So I think all this augurs well for PFC and REC. Because the quality of the book is going to be very, very important, the loan book, and that will have definitely will have a positive impact on the margins as well. So I think we remain positive.
Right. Fundamentally, UBS has put a aggressive increase in target price on PFC and REC, and Nirav conjures with the view. He does believe that the stock is set to do well, and of course the fundamentals are only improving as we see it. Well, it's expected to be a quiet start. Don't expect fireworks on the street. In the last 30 minutes yesterday as well, profits were taken off the table by bulls. This morning a start closer to 25,000 as we see it, 30 points off on the index. So remember, 25,000 is what's going to be shielded at least as hard as bulls will try in today's day of trade. The Nifty 50 down 30 points, the Sensex also trading flat. Another bad day for Bank Nifty. It's trading in line with the benchmark. It's not been able to play catch up, and this morning is no different. 80 points lower on Bank Nifty is how we have it. Yesterday, what was interesting is the underperformance came in from the broader market universe. It'd be interesting to see what happens this morning. Largely in line, mid-cap, micro-cap and small-cap index trading in line with the benchmark that's down 27 points. So no big sell-off, but of course trading slightly lower as we see it. This is popularly known as a time correction, which the markets are potentially going through as we see it. Well, let's take a look at the Nifty 50 and what's moving the markets in today's day of trade. The breadth is not looking good this morning. The bias is very clearly on the downside. You've got some of those tech names. So Wipro is doing okay, 0.8% higher. Remember, it's been a laggard in the IT pack in the recent rally. So this one could be one you want to track. We saw what happened to LTI-Mindtree. Today, of course, you want to watch out for Wipro. Not that it's going to see a big move like LTI-Mindtree, but could be seeing a little bit of a catch-up over the course of the next couple of weeks. Tech Mahindra as well trading higher. BPCL, HPCL could be movers on the upside as crude prices continue to ease. Bharti and Apollo hospitals are seeing marginal gains, but no significant buying is being seen. RIL trades flat ahead of its AGM. On the sell side, metals and cement are seeing some pressure and some profit taking on the likes of an LTI, which actually it'd be unfair to call it profit taking. After a 7% move, the stock actually sees a marginal downtake. But Tamanna, nothing exciting, no big winners, no big losers. I would keep an eye on Wipro for the next few weeks, because this one hasn't done well as it hasn't done as well as its peers. So you may see a little bit of catch up that potentially could be playing out this morning.
Yeah, and it's seeming like that as it's zooming to the top of the Nifty list at least. But it's a lackluster morning, to say the least. Let's just quickly look at what's happening in the broader markets as well, just once again. And yeah, there you're in the red as well on the Nifty mid-cap. Not massively, but that pressure is continuing on the small cap index. We're about 19 points up. Specific stocks, that's where the story is. Let's start with Paytm. We've been talking about it in the morning. They've got a node for investments into Paytm Payments Bank. That's a positive for the company, 3% up. One of the newsmakers today, Sonata Software, we were talking about that, gets a multi-year IT outsourcing deal from a US-based healthcare company, 8% up. That's one clear buzzer this morning. KEC International, it's 2,000 crore plus orders just this week. The second one coming in now. And remember, we're going to be talking to the company in just a few minutes from now, so stay tuned for that. Stock about 4.5%, nearly 5% up. Biocon is the other one. They have gotten market entry for the generic of Stelara in Europe, UK, Canada and Japan. So good news for Biocon, 1% up now. Genus Power, over 4,000 crore rupees worth of deals. Vodafone, because ahead of the curative petition on AGR, is running up as well. Some block deals that we should watch out for: InterGlobe, PB Fintech, Wellspun, all of them coming in. In fact, InterGlobe, the size of the block deal has been, the stake sale by Rakesh Gangwal has actually been upsized just before markets open, and that's seeing a bit of pressure. PB Fintech and Wellspun, meanwhile, in the green. So I would say a so-so day with few pops, Samina.
On the benchmark, nothing too exciting. The Nifty 500 as well is trading flat as it can be. But Sonata is your top winner. They've signed that multi-year pact in the healthcare space. We don't know the details of the deal yet, but it seems like it's significant. Markets are looking at this positively and constructively. The stock, after a fall of 5% yesterday, is up 8%. You've also got a couple of few names that I'd like to highlight. So you've got VIP Industries, that's up 3%. NBCC, ahead of that bonus issue board meet on 31st August, continues to trade higher. Remember, the stock as well was trading 17% higher in trade yesterday. Went home with only a gain of 9%. So, of course, making up that loss that the stock saw in the last half an hour, this morning looking good for NBCC on back of that. Aarti Pharma is also having a pleasant morning as we see it. The stock is seeing a very, very clear upside bias. Well, I think it's not just VIP. Safari as well is up 3% despite the end of the summer season. Travel and tourism stocks are doing well. Aarti Pharma is up 6.5%, and you've got Safari as well that sees an uptick of 2.5%. REC PFC are looking good. So is Vodafone. Raymond is up. Birla Soft is up again on a winning streak after a big up move in the early part of this week. On the sell side, you have a few names that are looking weak this morning. May not be too bad in that sense, but worth the mention is stocks like CDSL that are seeing some downward pressure as we see it. Along with that, you've got Procter & Gamble Hygiene. Numbers were a huge disappointment, 47% downtick on top line. The stock is getting a thumbs down, trading with a cut of 2.5%. No relief for metal names. Hindustan Zinc, Nalco continue to trade lower. You've also got Suzlon that's seeing a little bit of profits being taken off the table. So that's how the setup looks this morning. Largely on expected lines. You've got a few movers and shakers that are coming out on back of earnings, or rather on back of news flow. Nirav, I talked about how LTI Mindtree was playing catch up because it hadn't really been doing as well as its legacy peers, the Infosys and HCLs of the world. Today, Wipro is another one that hasn't done half as well as some of the frontline names. Do you feel like, just like how LTI performed yesterday, over the next few days, Wipro may see a good up move and could be a good tactical story here, at least until the Fed meet?
Well, it's quite possible that Wipro might play catch up, and we might see a kind of a small rally in the stock. But at least as far as we are concerned, we would like to stay away because we've already committed to Infosys and TCS, and we've started looking at some other names. As I already indicated earlier, that we've been looking at Tata Technologies. So it's quite possible that Wipro might move up, but I think we would like to stay away.
Okay. Thank you so much, Nirav and Aditya, for joining us today on the show on what is a quiet start, at least, to the markets. But it's all about individual newsmakers, and KEC International is a stock that has been in focus. It's won 2,000 crore plus orders just this week. Also, remember that there was a huge cabinet announcement yesterday on smart cities, etc. And in that infra play, KEC International is also one of the stocks that has been buzzing. Vimal Kejriwal, Managing Director and CEO of KEC International, now joining us on the show. Mr. Kejriwal, a very good morning to you, and thank you for speaking with us here at NDTV Profit. Let's talk about this order win spree first. What kind of details can you give us for both the order wins this week One, of course, 1,171 crores in the Middle East. Let's start with that one.
Good morning, Tamanna. Thank you for having me. So what we announced yesterday evening was two orders which we got, one from Saudi and one from UAE, Abu Dhabi. So that was 1,100 crores, both in transmission.
So both in transmission, and you had another order win of 1,079 crores in India, Middle East and America for supply of various types of cables, etc. Now, tell us, what is the order pipeline outlook looking like for the year?
So, Tamanna, even the earlier one which we announced, almost 90% was in transmission and largely Middle East and a little bit in India. Now, as far as the order pipeline is concerned, so this year we already got orders of close to 10,000 crores, 9,900 and odd, and we are L1 in another 7,500. Our stated announcement is that we should be doing around 25,000 crores of order intake for the year. And as of today, our tender pipeline, which is tenders which we have quoted right now, which are not yet opened, or tenders which we are going to quote in next, let's say, 2 or 3 months, is roughly around 150,000 crores. A very large tender pipeline on top of the current order intake and L1s.
Are you looking set to beat that 25,000 crore rupee order inflow target?
I'll keep my fingers crossed. But what is happening now is that let's say we have around 15,000, if you add not even 15, actually it's 17,000 in our bag sort of, we are trying to improve the quality of the orders. So, being very selective, more cash flow accretive, more margin accretive. So I'm looking at, instead of beating the order guidance, should we be beating, looking at the margin guidance better for the next year and all that, so that we get better orders this year.
Well, hi, it's also Samina joining in, and of course, thank you very much for taking the time out. I see you've got a little bit of injury on your hand, is it? Hope you feel better soon. But I want to talk about something that stood out for me. So while your order book looks exceptionally healthy, and we can't argue that in the order wins, the pipeline, all a thumbs up, execution has been a little bit of a challenge because of the lack of semi-skilled labor. And we saw the reflection of that in terms of your earnings reporting as well in the first quarter. Would it be a fair assumption to make that your execution challenges are now behind you, and the next 6 months execution will pick up, and hence the same will be reflected on revenue growth?
Good morning, Samina. I think you are right. We have been talking about a 15% growth, and we are still sticking to it. Execution has been a challenge, both in terms of labor in our civil business, in our T&D business. Also, a little bit challenge still continues on the supply chain side, especially on pipes and transformers and conductors. Although it's easing out. What has happened is that this challenge has been going on for more than a year, so people have expanded capacity. We have put up our own plant. So supply chain challenges are slowly easing out. Labor challenge, I'll say, still continuing. In the last 1.5 months, we were able to get at least additionally 3,000 or 4,000 people, but we are still short of almost 20% people, and it's across the industry. We had expected that, people had gone home for elections and they'll come back. They took their own sweet time to come back, and now we've hit the monsoons. So there have been 2 challenging quarters. Otherwise, we would have probably done better. But we are slowly seeing labor returning. Also, what is happening, Samina, is that with this continuous challenge, all the contractors and specialists are also looking at how do we mechanize more, automate, what else can we do, use precast, etc., so that we can sort of reduce the volatility in the entire system of project execution revenues. That's what we're trying to do.
You mentioned how the Middle East business is looking good, and the recent order wins have come in from UAE, Saudi Arabia, and I'm guessing the other Middle Eastern countries. What has changed there? Are you bidding for more orders in the Middle East? Is it just a function of a pickup in construction activity in the Middle East, or have you changed your strategy here?
So the third country we got a...
Right, so I think we have a bit of an audio issue with you. We'll try and go back to Mr. Kejriwal. But remember, KC has been bagging significant orders. and there's been also improvement in operational efficiency of the company. They've paid up some debt. Their US subsidiaries also looking good. So Kejriwal, I was coming back to you on this. Has there been a change of strategy at KEC, and is that why you're bagging significant orders in that geography? Or is it just a function and nature of improved infrastructure activity in those countries? And also any other orders you're bidding for in the Middle East?
So I'll say it's a mix of various factors. One is clearly we are seeing much more business coming up, especially in UAE. Saudi has been consistently coming out with new tenders. UAE had been a little bit, I'll say during COVID and post-COVID also, they had been a little bit slow. But now we are seeing a lot of tenders. I think this is my 4th or 5th win in UAE during the current year. Okay. Saudi, we have got large L1. Saudi had announced these programs long back. And we are seeing a lot more focus on execution coming on. Number one. Number two, I'm seeing them a little bit out of NEOM into other pieces. So I think we are seeing a lot of development happening in the other parts of Saudi also. Third piece is that with the volumes going up, what is happening is that the competitive intensity is coming down, which is also helping us to win more orders at I'll say, better margin. I think those are the three things which have happened in this area.
Is it a fair assumption for me that you're bidding for a lot more tenders in the Middle East right now? Any outstanding tenders that you are at?
I don't have the exact number, but we have around 40,000 crores of tenders to be bid in international T&D right now.
Success rate or your win rate?
Typically, it used to be between 10 to 15%. I think right now it's improved to almost 20%. Because we have also become a little bit more selective. We are not bidding to, let's say, all in country tenders with the order intake already improving. So I think it's now gone up to probably around 20%.
Odd crores is what you're looking to get from your global piece. Let's talk about margins, and you alluded to this, saying that your margins have improved in the business. What we saw in the quarter gone by, you had margins at about 5.99% at a firm level. I know cables, railways is a space that is still not at par with what T&D is doing, but you've reduced your finance cost, your US subsidiary SAE is also done quite well. What is the margin outlook? Do you feel like there's an upside, there's an outside chance that margins will only improve in the next 6 months of this year?
100%. I think if you look at our numbers, I think we are slightly above 6. I don't remember the exact number, but our guidance for the year has been at 7.5%. Which effectively means in Q3, Q4, we have to have a significantly better margin because Q3, Q4 are also revenue-wise heavy. Generally, they'll be 60% and Q1, Q2 would be around 40%. So the margins will definitely go up. I think what is stopping us from the margins going up today has been what you alluded to, worker shortage and all that. So what is happening is that right now we are closing all the old projects which we had won last year, etc., which were obviously at a lower margin. And once the new projects which we are now winning are coming into execution, we will clearly see a margin improvement happening. We are very clear about that.
And up to 7.5%. Did I get that right, Mr. Kejriwal?
Yes, 7.5 for the year, yes.
Okay, so that's great. That's a very robust margin guidance. Just wanted to get your take on an announcement that took place yesterday by Cabinet. 28,000 crores on smart cities and big boost to infrastructure. We're seeing that now rev up, in terms of government announcements. I'm wondering what that means for KEC International.
So we were actually present, I'll say decent size in smart cities. But then over the last 2-3 years, we saw that government suddenly had gone off very cool on smart cities. So we have actually sort of toned down that business. We'll have to wait and watch as to when this announcement gets converted into actual business. Also, what happens is that this involves dealing with the local administration, the state. There are too many players in the smart city game. So unless and until the whole piece gets smoothened out, I don't see a great opportunity today. Okay, maybe after 6 months, this opportunity can become big.
If you can give us a little detail of what that opportunity looks like, and I completely understand the point about if you're dealing with too many administrations, it becomes difficult to implement. But if you can break it down, what would that opportunity look like?
So sometime back when we were doing reasonably okay, we have done around, I think, 7 or 8 projects in smart cities. That time we had thought we'll do around 1,000 or 2,000 crores of revenue every year in smart city. Right now we have toned it down. Okay. And we'll wait for the opportunity to actually unfold and see what sort of tenders come out, what sizes, is it on a complete system integration or they break it into pieces and all that. We'll have to just wait and watch how does this translate into actual, ordering or tendering.
Sir, I know for a fact that the cables, railways and the civil engineering segment has been lagging behind for KC International. Are you seeing an improvement here? Are you seeing more inquiries, more tenders, more business coming your way on this vertical?
So cables has been lagging behind because of the volatility in metals. Aluminium and copper, which is the main raw material, have been going up and down. So customers have been waiting. So that's been the issue. But I think cables I'm not too much worried about. Our new plant on aluminum conductor will also get commissioned in Q3. So cables will pick up. Civil, we are growing very well. I think this quarter or last quarter also we grew by 30-35%. This year as a year, we should grow by 35-40. We'll cross 6,000 crores of revenue. So growth is not a challenge. I think challenge has been that we had some projects which are on the metro side, which are getting into a bit of a problem. And also there were some cash flow issues earlier on water projects. Now with the budget having been done, and I think the cash flows and all will improve. So we will definitely see improvement happening on the civil side, both in terms of revenue and margins. Railways is a bit of a...
So that should be reflected in this quarter itself, the civil and the water plant improvement?
No. I think the cash flows have now started coming in, so it will be reflective in Q3 and Q4. H2 it will be reflective.
And you were talking to me about the railway space.
So railways has been a bit of a disappointment in the way the contracts are right now getting executed. It's been a difficult journey. Okay, we have scaled down our railway business. This year we'll probably do around 2,500. Next year, I think right now government has announced large plans, new lines, more on Kavach and others. So we'll keep our fingers crossed. I don't see any improvement happening this year. But if the fresh tenders come, much more contractor friendly, then probably next year we should start seeing a revival of the railway business.
So Kejriwal, I'd have loved to chat with you longer, but one last question, and I know you've retired some amount of your debt recently. Give me a quick update. Any more plans to reduce debt, to improve your debt equity ratio, and also expansion plans? You said you're adding capacity and there are no major supply concerns yet. Very quickly on expansion and your debt equity.
So we have been doing routine expansion. We expanded our Dubai facility. We are now expanding our Jaipur facility. We are also expanding our cable facility. But these are all, annually we spend around 350-400 crores on capex. So that will continue. That will add to this debt. What I expect is that with margins improving, and we have generally all working capital debt. So I think we should be able to improve our debt profile. Maybe the debt may not go down, but we are talking about a 15% growth in our business. So the absolute numbers may remain where they are, but as a percentage of revenue, like last year we were about 3%. So this year we should be probably 2.5% of interest cost to the revenue. So the overall interest cost regime will become much more beneficial, and this is not counting any reduction which RBI may do.
Right. Thank you very, very much, Mr. Kejriwal. Hope you feel better soon, and we'd love to chat with you longer and have a more detailed conversation. But for now, your stock's getting very excited and happy with all the news flow. It's up about 5% as we see it. From one strong company to another, this one's Kaynes Technology, and they've got so much going for them right now. New plants are getting inaugurated, approvals are awaited. Jairam Sampath, whole-time director and CFO of Kaynes Tech, joins in. Good morning, Mr. Sampath, and I'm very sorry to have kept you waiting, but we were talking, or rather in a conversation with KC as well, so both significant in terms of news flow this morning. To start with, I believe there's been an inauguration of a new facility in Hyderabad. You want to walk me through this facility, whether you've already got clients awaited? I believe you're just awaiting the government's approval on a large part of the business to kick off.
Yeah, so the Hyderabad facility is focused towards the EMS business. And we, of course, have a lot of pending client orders, and this is right now aimed towards making it a power distribution equipment factory, including smart meters. And it's going to be a very large facility. This also is part of our ability to put larger facilities, starting with Chamarajnagar. So this is already operational. It was inaugurated this month. And we hope that this will start working with the full capacity in a couple of months' time. And this particular facility is an integrated facility. It's got plastics molding. It's got all the surface mount machines. It's got all other automation in assembly. It's got robotized handling of material. AGVs are there, and so on. So this is going to be a state-of-the-art integrated facility. And of course, we will use manpower to make sure that value-added jobs are there, programming is done, and making sure that the production efficiencies, quality control systems, and all of that works through.
Sampath, just to understand this, you've got the approval from the government, right? Because I know there was some confusion on the location. First it was Gujarat, then Telangana. So the approval has come through?
Yeah, so the approval is in the penultimate stage. Obviously, that you're talking about this semicon business.
Yes, Kaynes Semicon, the OSAT business, yes.
That's likely to be in Gujarat. And this facility we had earlier contemplated on putting other businesses too. But later on, we decided that it makes sense to, since being a large piece of land available there, makes sense to expand our EMS business itself. So we have now put our EMS business into this facility.
All right, Mr. Sampath, good morning. Tamanna here, and excited to talk to you about the kind of wide range of things you're doing. But I just want to spend a second looking back a little at Q1. And in Q1, where industrials, including EV, has really done very well, and which is why you had a great quarter, there has been a bit of a slide in automotive, railways, aerospace. Is this because of a seasonal impact? Do you see some of these segments coming back in Q2 and the rest of the year?
Yeah, so the Q1, as it is a lean season actually, typically, and it's about 15 to 16% of the whole year. And when we look at the other quarters, obviously, progressively it increases. Q2 becomes around 20-25%, Q3 is again 20-25%, Q4 will be 35-40%. And on year-on-year growth, I think has been pretty good. The industrial, so since we work on an order book, obviously we will always have orders to execute. Sometimes the blended margin comes down a little bit because of the different sectors that we execute or get schedules for. So we expect this entire thing to probably improve from Q2 onwards when some of these businesses in relay signaling, in aerospace defense, IT, all of these things start improving. And of course, our industrial and EV and also the automotive, they still remain a strong sector. So blended margins are also likely to go up in Q2, Q3, and thereafter, of course, Q4 will be a fairly good quarter.
Blended margins would go up to what extent? You were at about 13.3% in your Q1. So say by your annual margins, where do you expect this to go up? And like you explained, Q3 and Q4 is where things really fire up.
So taking a consolidated look at what we are going to execute, about 15% will be the EBITDA margin by the end of the year. Okay. And we already did about 3,000 crores, and I think we are well on our way to do that number.
I'm doing a little bit of a detour and going back to your OSAT business, because that could, I think, be an important trigger for the company, at least in the next 6 to 12 months. You talked about the expected production that's going to come online and the clients that you've already signed up. You want to talk to me about those, because I know there are a few significant ones that have already been committed to you in this, on the semicon space.
Yeah, so semicon space, I am not at liberty to take the names because of the confidentiality reasons. They are all global companies without their consent. But suffice it to say that over time, of course, there have been a delay of 3 months in actually getting the approvals on hand, and we are expecting it any time now. But during that time, we have strengthened our case for advanced packaging. And now we have a lot more clients in the area of advanced packaging, so that we build a niche for ourselves in the emerging areas of silicon photonics, compound semiconductors, and other things. So we follow a different path than most of the other OSAT players who are probably setting up. We limit our exposure to legacy packaging businesses to about 25%. 75% of the business we expect to do in the advanced packaging, which is going to sustain in the long run, even post the government subsidy regime, and still, become viable for investment. So we are very mindful of the fact, of course, our journey has been one of learning. Obviously, we came in as an outsider in the semicon business. But today, our understanding is somewhat better, somewhat superior. And we have also understood what the partners can do, etc. And what is it that company like us have to plan for the future. So we have already got a plan for next, let's say, 5 years or so. Right. And so we hope that we should be able to start revenues in this business by the fourth quarter of FY26 and earlier. We do a little bit of crash course on our construction and other things. That
Right.
Yeah.
Sir, just so, like you said, right, this will start turning revenue accretive. It's the advanced packaging business and the OSAT as well. And I know it's tough to call out in the next quarter. So between now and, say, the next 2 to 3 years, how much revenue contribution can we expect from Kaynes Semicon across the verticals that you talked about?
Yeah, if you take a 3-year time frame, let's say FY28, a little longer than 3 years, we should be able to do about 1,500 crores or so of this business at the minimum. And if we get our act together a little early and if all the things go as planned, in each case, probably we should exceed that number too. That is as far as the Kaynes Semicon's business is concerned.
How have you funded this project of yours? I think the money that you look to spend is about 6,500 crores. That's significant.
The total capex in the first stage, I don't want to confuse with phase. First stage is 3,000 crores of capex, which has been put up to the government for support on subsidies. And thereafter, we also promised to the government that another 1,000 crores of investment we will do. And of course, in perpetuity, in this business, of course, a lot more money will go in. That would depend on what kind of business that we get in and also what kind of customer pool is there, which we expect it to be strong, but it's too early to call that. So we want to get the first 3,000 crores of capex, which will yield around 3,000 crores of revenues by, say, FY30 or so. And in the meanwhile, somewhere down the line, maybe FY27, FY28, we will increase the capex amount. And so that this business will also generate, when it's doing advanced packaging, it's a fairly profitable business. It'll also generate its own cash for investments. So maybe it generates 300, 400, 500 crores a year. And once the sizes go up, of course, that number can also go up. So we are looking at it in the long term, and we look at it as an integrated part of the integrated EMS business.
Mr. Sampath, just want to talk a bit about the railways part of it as well, because that portion and the work that the company is doing on Kavach, how much of an upside are you seeing there? Q1 would understandably be quiet on that front. You were in the middle of an election cycle, etc. But now that we've seen budget allocations, focus on safety, what is the outlook for this segment of the business?
Yeah, so there are different views on this business in terms of government's infrastructure spending, whether it's muted post their elections and so on. But we don't see any such intention. Of course, the first quarter was bit of a loss because of the election process. But I think the schedules have started coming in. So we expect it to get into a normal routine by the end of the year, and FY26, FY27, etc., when our Kavach program also kicks in. Railway obviously will become a significant 15% of our revenues by, say, FY26 and FY27.
All right. Thank you so much, Jairam Sampath, whole-time director and CFO of Kaynes Technology. They're talking about the outlook, and it's OSAT one to watch for, the semiconductor part of the play, and of course the railways part of the play as well. One big takeaway from that conversation, they're expecting blended margins to improve significantly, up to 15%. As well. Now, moving on to the conversation we had with Balaji Amines, the company is in focus as we enter the end of the monsoon season. How is demand shaping up? How is the agrochemical sector faring? My colleague Varsha spoke with the Managing Director D. Ram Reddy for this and more. Listen in.
See, presently it is little, you can say about 3 to 4% better than the last quarter. But we expect, as you rightly said, that in the coming 1-2 quarters, by the year end, we can see definitely there is a positive and encouraging results you can see from all over the sector.
Okay, so we can see improvement from H2 FY25 in agrochemical sector, and that will also reflect in your numbers because we did saw subdued numbers in Q1 with respect to Balaji as a whole.
Yeah, if you say about consolidated, yes, because our subsidiary did not perform well. That's the reason you will see the unconsolidated little weaker. But when you take on the standalone, we have done for the first quarter about 54.61 crores as against 47.35 crores for the similar year. And we have seen there's a growth of 10% in volume growth when you compare with the similar quarter last year and this year. This shows that improvement is there. Second thing, as you said that there's a lot of expansions programs are in hand. So this maybe next month or first week of October, the one plant, that is methylamine plant, will be commissioned. And after that, before 31st March, one dimethyl ether plant again, first time in the country, is going to be commissioned. Along with that, the solar plant, solar park. Part of the solar generation will start by end December or first week of January. Maybe 8 megawatt will be generating. And in the coming quarters, maybe next year, first or second quarter, you will see total 17-18 megawatt to 20 megawatt total power will be generated from the solar, and all our requirement of the power will be met from the solar park. So with looking into this, all these expansions and positives, we feel that definitely the coming quarters and coming years will be definitely good at large. Another important thing, sir, because we were waiting for last 1-2 years about the lithium battery, because they have delayed. Every week we are having the meetings with the various lithium battery manufacturers. I hope that end of this financial year, at least one company should start the lithium battery, where our major material will go as a raw material, that is N-methyl-2-pedalone, which is approved with one customer, and we are in the process for the other 2-3 customers. So these are, one will start next year. After that, there are 3-4 companies for battery manufacturing, whereby we are only people for that raw materials. So definitely we will see the greater opportunity for the NMP and other products. Also, expansions in the subsidiary. As I said that presently, Balaji Specialty Chemicals is not doing well because one thing is the dumping from the China, other thing is product mix. We were talking the last 2 years product mix, we are doing a lot of R&D. We just received the environmental clearance the 16th of August, and we are allowed to start the construction of the plant, where we ran down the plans for about investment of 750 crores in 2 phases. And first phase will be 300 to 400 crores, which will start spending from this month onwards. Already started construction and all started. And there we have very exciting products like hydrogen cyanide, sodium cyanide. There are a lot of derivatives of cyanide basis products, which are all import substitute value addition products. This will give boost to the subsidiary. And along with that, as we said that the product mix, like changing some, doing some R&D thing, which is coming into the stream, maybe for next 3-4 months, it will come on the line. That also will give some positive results for the subsidiary. Once that is done, then we will see the results. And you see, all the plants having all global size plants. Today may not be demand, maybe some problem with the matching raw material, some problem with the logistic issue, some problem with the Red Sea issue. That may be reason, but the moment it takes, we are ready with all the plants. And if they go even at 60-70% capacity, it is more than enough for showing the better results.
So speaking of batteries, I actually wanted to ask you, have you signed agreements with manufacturers, and when can we start seeing these numbers reflected in your results?
See, they say that they will start from the third or fourth quarter. But I can't believe that it's all first-time industries. They will have the teething problems. I believe that next financial year, at least one company will come, which are in the front run. With them, we already discussed discussions, all the technical discussion completed. We are at final stage for the commercial discussions. So that is one thing. And second company may come year after year. They may say that we are coming, but in my view, this is my personal view, my personal experience, only one company I am seeing positively, which will come from the next financial year.
Also, Mr. Reddy, given your ongoing expansion plans with value-added products, do you expect an improvement in margins? And what level of incremental revenue do you anticipate from this upcoming capex?
Definitely, there should be revenue improvement as well as margins improvement will be there, because whatever expansions we are doing today, we are not borrowing anything. There is no interest burden. Only thing is the money which was parked in the banks for the FDs are broken and invested, and we were getting marginal, very nominal interest for that. So there will not be any borrowing burden. And looking into this, definitely we will be having good margins. There will be improvement in the margins. We are this quarter, I think we have done EBITDAs of 18.96, around 19%. I was all the time talking 20, 22, but one or the other reason we were not in a position to reach that, at least last 2-3 quarters. This quarter we are supposed to be done.
We noticed that margins were down in Q1 despite a strong, Q-on-Q performance previously. What were the key factors behind this decline?
See, one thing I was telling that pre-COVID the results, which were 24 to 26% EBITDA margin, that you should not take as a precedent and we should compare. You just take before COVID what was the margins and see the comparison improvement from that. In between period after during COVID and after COVID, there was a tremendous external benefits for all the industry, pharma, API, intermediates, and specialty chemicals. That cannot be taken. Of course, after that there were when we were having 26 to 28% EBITDA margin, that time we have procured some raw material. Everybody is procured. So for 1-2 quarters, the moment prices have gone down, so people were having, including us, were having some high cost raw materials. The same time, that was the time where China has came very rapidly dumping, emptying their warehouses, irrespective of any price, any margins, they were dumping. Now in last 1 quarter, this quarter, we are seeing some improvement in the prices of the Chinese, whereby we are in a position to improve. Not only us, but everybody is started improving their margins. But when you go in the large scale, utilizing the plants at large capacity, these margins will be improved.
All right, whole host of corporate conversations on India Market Open. Before we wrap on the show, a quick look at where the markets are back in positive territory on the key indices. The Nifty just there about 25,000, inching in on 25,100. But remember, this is from where a lot of gains were given up. Nifty IT still looking pretty strong relatively, and we'll just pull up sectoral indices very quickly before I get into the break. Fin Nifty also doing decently, but Bank Nifty not yet firing, and that's really when the difference will come in. All right, we'll take a very short break, but stay tuned. A talking point up next.